What's the difference between a taxidermist and the taxman? Simple. The taxidermist leaves the skin on. Hi folks, it's that busy time of year. It's tax return season. You could be one of the many millions of people who've yet to complete your personal tax return. Some good news, HMRC have extended the deadline for the submission of the online return to the end of February. It's likely to be a one-off concession, but you still get charged interest on overdue tax. In this video, I'm going to show you who needs to complete a personal tax return in the United Kingdom, what's the key information that you need to include in that tax return, some outlined costs that you can claim if you're self-employed, and the key dates and what to do if you haven't got the money to pay any tax that's due. Folks, this is I Hate Numbers, the video podcast channel that's there to help you improve your money mindset, help your business make more profit, save tax and time, and increase your financial awareness. What's not to love about that? Remember to smash, I believe that's the phrase, the subscribe button, and so you can get weekly updates straight into your inbox and keep up to date with matters that affect your business. Follow me and let's go and have a look at the presentation. In this presentation, I'm going to outline 4 key things. Who needs to actually complete a tax return in the United Kingdom? Not everybody does. What do you need to actually include by way of information into the tax return, and what's the composition of the tax return itself? Thirdly, what you can claim if you're self-employed and in business. What can you claim to help reduce any tax that you're likely to pay? And lastly, relevant dates and the payment of the tax, and what to do if you are unable to pay the tax person what they're due. Firstly, let's deal with who needs to actually complete a tax return. Not every single taxpayer in the United Kingdom needs to complete one. The main categories are those who are self-employed, what sometimes are called sole traders, where the annual sales that you generate are over £1,000. If you are a higher paid employee, and a higher paid employee is classified as somebody who's just on the upper level of what's called the basic rate band. For 2021, that figure is £50,000. The second criteria to that, by the way, is if you're receiving income that hasn't been taxed at source. So e.g. if you've got a rental property and you're a higher paid employee, then that's going to count for you. If you're a company director in receipt of anything apart from PAYE, then you have to complete a tax return. By the way, folks, directors of not-for-profit organisations, of charities, do not need to complete one unless you are in receipt of benefits outside of PAYE. A higher earner that's also in receipt of child benefit, obviously when I say receipt, claiming child benefit, in that situation you must also complete a tax return. If you've made a loss either in self-employment or property or somewhere else, then you need to complete a tax return in order to reinforce and claim the losses. And lastly, if you're engaged in capital transaction, now capital transactions are things like you're selling shares, investment properties, other assets for which something called a chargeable or capital gain would arise. The tax return is a return of income for an individual as well as capital gains. One small point to note, folks, that we said earlier on, if you receive a property income in excess of £2,500, you also complete that tax return, and we put that under the category of the self-employed. Now, in the beginning, what do we need to do? Well, the return, first of all, visualise this as made up of 2 components. There's a core section, and there's the extra, or what's called supplementary pages. Now, the core section is effectively where you include things like your name. One critical piece of information is your tax reference, a 10-digit number called a UTR, which stands for Unique Tax Reference. If you don't have one of those, by the way, you're stymied. You need to make sure you've got one. If you've lost it or haven't even registered, get your act together and make sure you get that done. You also include your name, date of birth, national insurance number, and within the return, you'll be including things like any savings income, the interest on, pension payments, gift aid claims, dividends received, will all go into the core return. There'll be other information that you need to include, but that is some of the main information itself. Additional pages I refer to are what are called supplementary pages, and they will include income from employment, self-employment, and effectively partnerships, property income, foreign income, capital gains, and if you're non-resident or what's called a dual resident, there's a section there for you. Now, if we continue this here, information gathering, make sure you've got something gathered and backing up the figures that go into your tax return. Estimates are okay, but the original source document is ideal. So for employment income, a P60 is essential, or a P45, and also a P11D if you are in receipt of company benefits such as cars, medical insurance benefits, housing. If that's provided by your employer, you will get a P11D. If you haven't got one, then speak to your accounts department accordingly. For self-employed, it's going to be made from your business accounts. Property and landlords, here it will be largely your rental accounts that are done. Now, if you don't have the evidence to back up the figures that go into your tax return, do not worry too much. You are entitled to make what are called reasonable estimates. Don't put your finger in the air. Make sure you've got some substance behind the calculations themselves. So estimates are okay in the absence of anything else. You have to disclose that in your tax return, by the way, that you are indeed making estimates. Now, what can you claim if you're self-employed? Now, the rationale behind claiming for self-employed is it's largely what's called wholly and exclusively for business purposes. Now, that's a very interesting phrase here. What you've got to think in terms of is if your business is, say, for example, in a restaurant business, then all the business costs that you've had in relation to generating that income is initially fair game. So think of the nature of your business, think what you've spent in respect of generating, earning that income, and then that prima facie becomes the basis of a valid claim. Do not include personal costs. So if you're going on holiday, travelling on personal business, then those costs will not be allowed. It may be that you've got some expenses that you spend money on, so like telephony costs, transportation costs, where the cost is split between business use and personal use. If you're a sole trader, self-employed, HMRC will allow you to make a split between the business element and the personal element. If you've made capital purchase, so you're buying equipment, you're buying telephones, you're buying machinery or equipment for use in your business, you can claim capital allowances, but that must be separated out and recorded separately within the tax return. And lastly, entertainment. Be very careful of this, folks. Commercially, you may spend money on keeping customers happy, suppliers, money that's classified as entertainment, meeting up with potential customers, having a meal, having a drink. Unfortunately, it's classified as entertainment and you will not be able to claim that cost. As a footnote, by the way, if you're having a meeting which has got an agenda, it's going to last for about an hour and the food is incidental to that, then potentially that is claimable. There's a link in the show note, folks, where I'll share some more information with you on that topic. There is a regime available called Simplified Expenses. Now, Simplified Expenses, two things to note. First of all, it's only available for sole traders and partnerships. So if you're a limited company, as a director, you cannot claim simplified expenses as to what we're looking at here. There is one exception. Secondly, your business has got to be generating no more than the £85,000 per annum. Those figures will change, but it tends to be in line with what's called the VAT threshold. Now, if we look at transportation, as a sole trader, you have an option. You can either claim the actual costs of running your vehicle for the business dimension, so you add up the petrol cost, the car tax, the insurance, the roadside delivery breakdown will be dealt with separately, the cost of purchase of the vehicle, and you adjust for personal use, or you can claim a mileage rate. And for each business mile that you travel, 45 pence up to 10,000 miles and 25p a mile thereafter. Alternative transportation may be your thing, so motorcycles, 24 pence per mile, flat rate across. If you wish to keep fit and you're using a bicycle, bear in mind that you can claim 20 pence for each business mile. Now, use of home. Many business owners Many businesses will be working from home. And if you're working at home on or in your business, again, you've got two choices. You claim the actual costs of running your space in your house for your office, or you use a flat rate scheme instead. It's based on the number of hours on average you're working at home on or in your business, ranging from the £10 per month if you work between 25 and 50 hours to as much as £26 per month if you work over 101 hours. Now, before we move on, folks, just bear in mind a footnote, please, about the transportation. Transportation is either actual costs or mileage. Once you make the decision, you cannot chop and change each year. It can only be changed once you change the vehicle. Now, key dates. Make sure you've registered and informed HMRC. If you don't have a tax reference, or you discover that you've got to complete a tax return and that reference cannot be found, you must organise it immediately, because you will not be able to file a return, or you're going to find it very challenging online unless you've got a tax reference number. So make sure HMRC is aware and you've registered accordingly. Check the show notes and there'll be some links to HMRC site where you can access those registration forms. Now, paper returns by default are normally due on the 31st of October after the end of the tax year. There's a little less known fact though, that if you, on religious grounds for example, do not want to use the internet or cannot use the internet on religious grounds, then you can file your return still by paper. So a large proportion of people still file electronically, online, and online returns by default are normally 31st of January after the end of the tax year. HMRC though have granted an extension and you've got until February 2022 to file your 2021 tax return. Interest, by the way, will still be due if tax is not paid by the 31st of January. So let's look at some key dates. Now, the normal date of collection, if you owe less than £3,000, you can collect it through your tax code if you're under PAYE. For 2021, again, make sure it's submitted by October. Where we are in real time now, that's not going to be feasible. Tax is due, even though the payment for submission of tax returns is extended. Tax is due by 31st of January following the end of the tax year. So for the 2021 tax year, the tax is due by 31st of January 2022. Now, a little thing that sometimes scares taxpayers, and it can be a shock, especially if it's your first time of completing or income has gone up, is there will be a payment on account that may be due. So if you owe more than £1,000 and it's likely your income will stay at the same level the following year, then you've got to pay 50% of that money owing upfront going towards your tax bill for next year. You also have to make a payment on the 31st of July 2022 as well. Now, you can claim to reduce your payments on account. Please check the show notes for a link and related resources on what you need to do and when it applies. Now, if you're unable to pay, which is quite likely if it's unexpected, you've not been putting money aside to pay for your tax, then firstly, do not impersonate an ostrich. You must deal with this, confront this. Interest will still clock up. HMRC could get very upset and angry. So effectively avoid the ostrich dance and get that tax return in as soon as you can. Once the tax return is in there, then you can organise any facility for time to pay. Now, time to pay now, by the way, you can do this online without any interaction with somebody from HMRC. If the tax debt typically is less than $30,000 and you want to pay it within 12 months, then you can do it without talking to an agent. If you prefer to speak to somebody, then speak to HMRC debt collection, or debt management, I should say. Again, check the show notes for a link. Be aware that if you decide to ignore this and you do not pay the taxes due or submit your tax return, HMRC is likely to do an estimate, levy penalties, and they will outsource that to external debt collection agencies who may not be as cuddly as you may think. Folks, I hope you found this video useful. I'd love it if you could give some feedback. You may find people in your network who would benefit from that, so I'd love it if you could share. That's my contact details. Head onto the website, subscribe to the YouTube channel, and folks, best of luck, head down and get those tax returns in.